Hello, Finimizers. Welcome to another Finimize live event. My name is Stefan. I'm an analyst here at Finimize, and I'm hosting today's event, Why Real Estate Could Be a Solid Investment Right Now, with our partner, Allbricks. Before we start, just some very quick and easy housekeeping rules to run through. Please feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. In terms of format, this is going to be a 15-minute conversation followed by a 15-minute audience Q&A. So please use the Q&A box to ask a question, not the chat box, the Q&A box. And if you see a question that you like, please upvote it so it moves to the top, and that way we can get through the most upvoted questions first. All right, so let's kick this off. Our event partner today is Allbricks. Allbricks is an innovative home buying and property investment solution. Their goal is to revolutionize the way people buy homes and invest in property, offering socially conscious property investment opportunities whilst giving millions of potential buyers a home to call their home. So today I'm joined by their CEO, Shahram Shaida. And as the founder and CEO of Allbricks, Shahram has built a new approach to gradual homeownership and property investment by unitising residential property and getting rid of the need for a mortgage. He spent the last 6 years building a company with the vision of making homeownership a reality again and democratizing wealth. So if you'd like to know more about Allbricks, we'll share a link in the chat box shortly. So please have a look. Super excited to have you today. Shahram, how are you doing?
Thank you, Stefan. It's very exciting to be on here. Nice to see you and the Finimize community. I've been a part of this for a little while now and really enjoy the content that you guys put out, and it's a pleasure to be on this.
Awesome. And actually, I have to admit, I've been looking at real estate, residential real estate, especially, and properties a lot lately, and I'm really super excited. Not just because I think what you guys is truly interesting and different, but also just because of there are just so many things going on in that space right now. So I'm sure that our Finimizers will have a lot of questions also on the outlook for real estate prices, etc., etc. But let me first start with a stage setting, some sort of background question. What are the different ways that people can invest in property? Just a brief overview.
Okay. So the most popular by far way of investing in property in the UK is buy-to-let. So mom and pop, the landlords, there's 75% of properties in the UK are now owned with people who own less than 5 properties. So it's people buying a house and renting it out. That's the first one. Then there's real estate trusts, which these essentially are funds that people put their money into. They're like a stock where they take into account the underlying growth and the yield, and they go up and down with the market. They can be a balance of residential or commercial. You can choose where you want to invest through a REIT, and they're similar to funds, except with a fund, you get an average return back. So they promise you 5% and it never fluctuates. And there's houses of multiple occupancy. These are probably for more, or HMOs. These are for more seasoned investors. And this is where things like student accommodation, where you've got 5 students or 6 students in one dwelling, that's an option. There are bridging loans, so people can invest in other companies, like Crowd Property is one that allows people to fractionally invest in bridging loans. And there's, of course, Allbricks, which is the new kid on the block. We've unitized residential property, allowing you to invest or buy portions of property in any residential property.
Awesome, thanks a lot. And I think we will cover which one you think is the best option just a little bit later in the conversation.
Yeah.
So now let's maybe talk a little bit about the real estate market, especially like the property market today. What are the current trends and key factors that are shaping the property market today?
Yeah. The UK residential property market has started to significantly change from around 2015, when new regulation came in and new legislation, essentially putting more rigor around how landlords need to run their properties. This has driven a significant number of investors out or made them think about leaving. Then we had the mini crisis, and now we've got the interest rate rises. So becoming a property investor has become more difficult in the past few years in the UK. Because of additional overheads, and with rising interest rates, the landlords now have a challenge. Most landlords are good people who want to help others come into their own homes. Now they have a significant challenge here with the rising interest rates and having to balance that with having rents that catch up to that. There are many tenants or renters today that can't keep up with a mortgage that's gone up, 30%, 40%, as many landlords are experiencing. And likewise, the landlords can't swallow those costs. So that's one side of the economics. The other side is when property prices start to fall, seasoned investors, this is what they live for. They look forward to times when the market is coming down because they essentially look for consistent investment over time, which means in a down market, they're getting better deals. And to give you an example of that, I think there's something called, I can't remember the term for it, but essentially, if you've got £100,000 or £50,000 to invest, it's very hard for you to catch the bottom of the market, right? So you're always thinking, is this the bottom? Is it going to go down far? This is what puts off people from being able to buy or buy to let today, because they don't know if the market's going to drop further or not. However, if you split that £50,000 into £5,000 chunks and invested each £5,000 over the next 5 months, first of all, that's your amount that you're putting in. This month, you might get £5,000 worth of house from it. Next month, you might get £6,000 worth of house from it because the value is coming down. So this is a good way to mitigate a market that's going down, is to spread your investment across a period in time. And that actually ensures that you are in the market and you're taking advantage. One last thing on this thing, people who've got cash, who've got lots of cash, can take advantage of a market like this because it's harder for home buyers and investors to get either mortgage loans or property investment loans. So the people who've got a lot of money find it easier to take advantage of this market. Something like Allbricks, for the first time, gives both the home buyers and the investors an opportunity to buy in a down market because banks are giving less mortgages, it's more expensive. But with this, you can, because we've unitized it, it's simple for you to come in chunks and actually take advantage of that.
Yeah, no, I think it makes a lot of sense. So now let me ask you a question a little bit. Actually, it's kind of two questions. So why should retail investors consider investing in real estate now? And I'm saying it's two questions because I guess, one part of the question is why should retail investors be considering investing in real estate in general? And then the second part is why now?
So in general, real estate has always been one of the lowest risk investments that you can engage in. Right, going back to the financing of the UK after World War I, I was having a very interesting conversation with somebody just before this. The people who financed the rebuild of the UK was property owners. So people looked to landowners, property owners, that's where the wealth was. So historically, property has always been very attractive. It's always had good returns and it's stable. It's something that you can go and touch. And traditionally, again, the demand for property has always outweighed the supply, especially in the UK. Why should you invest now? Let me paint a picture for you. 3 years ago, or before COVID, when the market was red hot, you had 10 to 20 home buyers or investors vying for each property. In that market, you are always paying over the odds of what that actual property could be worth. Ideally, and this is what seasoned investors wait for, is for the market to cool off and start to come down. And in the pound cost averaging that I talked about before, where you split your investment over time, this is the perfect kind of market. You're putting in £5,000 a month or whatever your budget is, and you don't want to catch the bottom, but you know that you're getting value for your money. And as the market goes down, the further it goes down, the better value you're getting for your investment.
Okay, thank you. Thank you so much. Now, what are some of the exciting new opportunities in real estate? And, here I'm really talking specifically targeted at retail investors, if possible, and how do they differ from other more traditional investments?
Are you talking about the innovation that's in the market or the availability of methods to invest?
Maybe more in terms of investment opportunities, like what really excites you in that space, and also how would you implement the investment? So I guess here it's also an opportunity for you to explain a little bit how Allbricks works exactly.
Yeah. So again, you need to look for ways to get into this market to take advantage of where the property prices are. In a market where the property prices are coming down, if you can take advantage of that, so for example, you can get a good deal either buying the house to live in yourself or as an investor, then there's a famous adage in property that says you make your money in property when you buy, not when you sell, because you're buying at a discount or you're buying at a good value. Companies like Allbricks, our mission is to make homeownership a reality, but we've done it in a way where we've unitized property. And what that means is you no longer need a 25 to 45% deposit as an investor to be able to benefit from a property market. In a market like this, the traditional lenders are very wary of negative equity. And what that means is that you pay £250,000 for this house today, but in 6 months' time, it might be worth $200,000. But that's where companies like Allbricks come in, because you can, as an investor, invest a little bit. You can distribute your investor across multiple properties in multiple geographic areas. You can balance your yield versus growth. So this is how much rent I get per month, and this is how much the property I think will go up and down in the next 5 years or so. Because the average traditional property investor in the UK invests for around 7 years. So what excites me specifically about Allbricks itself is we give everybody the chance to benefit from this downturn in the market. Previously, I mentioned that only the rich who've got cash can jump into this and take advantage of a house that's selling for £100,000 undervalued, because the banks probably won't give you a mortgage on that because it doesn't match their valuation. And also there's the fear of negative equity. As an investor, the same thing applies to you. Can I get somebody to rent this for this price? And can I get a mortgage that's actually cost effective at these interest rates with this much deposit? And what Allbricks does is it allows you to invest from £2,000 into multiple properties. And the differentiator for us is you become an angel investor and you are helping somebody realize their dream of home ownership. So you can help your local community, you can help your family, you can help your friends. And again, this is a new way to replace or provide an alternative to traditional methods of buying a home. And more importantly, in the way of investing in property, you don't have to have this giant chunk of money that you're going to tie up in one property. Spread it across multiple properties, do it in a time frame that allows you to take the most advantage of property prices, whether they're going up or down. Because if you consistently invest over a period, that investment over time will balance itself out and mitigate the troughs and the peaks.
Yeah, no, and I think that's really why, I also find what you guys do so interesting, because you also have a positive impact on the community around you. Now, the next question is, I think you've outlined the sort of investment opportunity extremely well. Now, what are the main risks for investors?
Across the market or with Allbricks? You're talking about across the market, right?
Across the market generally, and then potentially with Allbricks, and it's slightly different way of doing it.
Yeah, the two biggest risks right now is the inflation risk. So the mortgages that are not fixed going up. There are a lot of landlords who are on fixed mortgages. They're coming off those, and they're finding that their repayments go from £500 to £1,500. Now, if you've got somebody who's been renting that for £1,100 a month and you had a £600 buffer, you suddenly find that you're £400 a month short just to making your mortgage. Now, they try and raise the rent, but as the renter living in there, you're like, how am I going to afford that much of a raise? So there is a risk of actually, if you don't have a lot of equity in a property that's leveraged, and this is the key point. So I've borrowed against a lot of money that when the cost of borrowing goes up, it becomes untenable. And the second risk is that actually nobody really knows where this is going to end. So, there's talk about interest rates and the inflation peaking and coming down. Because nobody can call what's happening and there's so much uncertainty in the market, that drives people's perceptions of value and also the risk of ending up in negative equity and not being able to service that investment. People kind of sitting on the sidelines and thinking, I'm just going to wait until I understand what's happening in the market. But that's because traditionally people have to put in all their eggs in one basket and say, right, I'm going to take a gamble that this is the bottom.
Thank you so much, Shahram. Okay, so now that's it in terms of our conversation, but now let's move on to the Q&A. So please, everyone, if you have any questions, remember just write them in the Q&A box and make sure to upvote for the questions that you want to see answered first. So the first question here, is Allbricks reserved only for UK residents or can foreigners invest with you?
At the moment, at launch in this phase, it is for UK tax-paying investors only. However, as we grow and expand, we will be bringing in money from international investors as well. And we are speaking to a few people to kind of accommodate that and build that facility. And the Allbricks vision is that anybody who wants to invest in the UK residential property, whether it's an institution, whether it's a person, whether in the UK or outside the UK, we'll be able to facilitate that.
Awesome, thanks. As a young person, would it be better to invest or buy a property? What is a typical return from an Allbricks investor?
So that's a really interesting question, and the answer is very complicated. But I'll say this to you. For me, I bought my house because I wanted stability. You know, in the last 12 years or 23 years that I've lived in the UK, I've had to move 12 times, and 2 of those have been by choice. The other 9 times or 10 times was when my landlord said, I want to sell the property. I lived in the same street, in 5 houses in the same street. So the answer to your question is, how much stability do you need in your life? If you need stability, you want to be close to family, you want to be close to your job, raise kids, then I would say buying a house is important. Buy a house so that you get that stability. However, if you're talking about pure economics, then that's a very hard question to answer without knowing the details. But let me give you an example of what you could do with Allbricks. You could buy your own house with Allbricks for £10,000. But if there's houses that you see that are growing faster than yours in our platform, you can actually use any spare money you have to invest in those rather than paying a hefty interest rate to a bank, right? So if I've got a house that's going up 6%, 7% somewhere else, and my house is going at 3%, it makes sense that I put my extra money into those houses, which means that actually, at the end of the day, I'm getting the highest growth for my property. So you can have the best of both worlds with Allbricks.
Interesting. The next question, are you able to explain how remortgaging works? I'm looking to buy my first property with a deposit to refurb and eventually to do a buy to let or a HMO. I'm thinking of securing a fixed mortgage, which requires to be paid back in a year and then refinance after this year with the remaining profit.
Yeah, look, I'm not a mortgage expert, so I can't give mortgage advice. But from experience, there's some risks in what you're trying to do, and that is the purchase cost, the refurbished costs, and the sale costs. Especially for first-time people who are doing this, they usually they pay too much for the purchase, they pay too much on the refurbs, and actually they don't get enough on the sale. And that's what will cause you problems. You know, for what you recommended, you know, you could use a bridging loan. There are facilities out there. You have to be very careful in buying a house that you want to flip with a traditional mortgage to refurb, because again, I'm not a mortgage expert, but I think that's illegal and is considered mortgage fraud. So you have to take out bridging loans and the right finance for the purpose of what you're trying to do. I can't answer that question. I'm not a mortgage expert.
Do you know how much demand for residential properties has changed over the past year due to higher interest rates?
Yes. This is a very strange statistic. So last month, there was an increase in number of mortgages issued to the previous few months. Now, it's possible that people see inflation plateauing, so they're trying to get back into the property, those who've been waiting on the sidelines. But the demand for property ownership in the UK has not wavered in the last 100, 200 years. Everybody in the UK wants to own their own home. And the fact is there's not enough homes. So demand, you know, there was a couple of articles that for rental properties, this is not even people trying to buy, but for rental properties, there's 20 tenants for every place that's up for rent. And some landlords, you know, have the luxury of being able to ask for 6 months or 12 months rent in advance. So right now in the UK, there's very high demand for both property investment and home ownership, and actually tenants looking for a home to live in.
Yeah, that's something that's also personally surprised me. You know, the strengths of the market, not just in the UK, actually, like all around the world, almost.
Stefan, I think
a very interesting question from David. How do you select where you'll invest with Allbricks? Is there a community by community option, or is it just a percentage return across your entire portfolio?
That's a very good question. And the answer is we don't, you do. So our home buyers buy anywhere they want to buy a house. We don't dictate where they want to buy a house. We have certain criteria to make sure the house is a good investment for the investors. However, that's where it stops. So you can choose to invest in your community. You can choose to help your friends and family, your city, and eventually we are going to be global, so anywhere you want. But the simple answer to that is you will see properties listed on our platform, as well as the traditional information about that property. There's 2 key factors that you look at. What's the yield for that property, and what's the price change in that property for the last 3 years? And that will help you decide where you want to invest. So we don't dictate to you. We don't pick the properties. This is people bringing the properties to us that they want to live. And importantly, unlike a lot of other things, we don't just help new builds. We help any house, right? So it's called the secondhand property market in the UK, that just means that it's an established house. So you see a variety on there, and you choose what best suits your investment strategy.
And what's the guarantee on the capital?
So we've unitized residential property, and what that means is when you invest in my house, if you invest £10,000, then you own £10,000 of my house. It's not an underpinned, asset. It's not a share. It's not a token. You own it. So the guarantee is you own that part of the property.
Okay. Are there any emerging hotspots or areas with significant potential for growth?
Yes. The government does publish a list of areas that is regenerating or rejuvenating. Those are usually good spots. Look at where new transport links are coming in. Look at where, usually when there's a really hot spot that's kind of red hot, the areas around it will start to come up as well, because somebody looks at that area and goes, ooh, that investment doesn't quite make financial sense. But if I go, 100 meters that way, that's actually slightly cheaper, and it makes more economic sense. So there's plenty of data out there. If you look at, just Google what are the hotspots of upcoming properties, it's very revealing. Now, whether that's hype or truth, only experience tells. And I think if you study enough data and look at the trends of why places become property hotspots, you can actually pretty quickly figure out where those are. But again, we don't emphasize our investments in hotspots. Where the investors want to buy in those things, then great. But we do it in a way that we want to make homeownership a reality for everybody. And our investors will choose what's right for them or not.
And if you want to exit what happens then?
Yeah, so you've been in my house. There's a couple of interesting points here. So you've been in a house. I've bought £10,000 of this house, which is what I needed to buy from Allbricks. Investors have bought the rest of it. I pay them rent on the portion that I don't own. Two scenarios. One is I now want to come out of the investment, or one of the investors wants to come out. They put their bricks up for sale on our secondary market. Now, they put that up at today's value. We value it every 3 months, so it's always up to date for your bricks. The home buyer gets the first right of refusal because we want them to buy more of their house. So they may buy your bricks. If they don't buy your bricks, then it's open to other investors being able to buy your bricks.
But that's only on the Allbricks platform. So if there is no one to buy, what happens then?
So it's like saying if I have a buy to let and I want to sell it and no one buys it, what happens? These are natural market forces. So, but actually we do have the advantage that the home buyer there wants to buy your bricks or own more of their house. So it's not like finding a cold buyer that'll buy your investment. It's very difficult to sell your own buy to let in a down market. Whereas with Allbricks, first of all, there's that homeowner, but don't forget, we enable you to spread that risk across 20 properties, 30 properties. So you de-risk being stuck in that property to 1/30th, 1/20th, 1/50th, whatever you choose is a safe number for you to diversify in.
Got you. So actually a question related to how it fits a portfolio. Is it best to consider a specific asset allocation to something like Allbricks/real estate? Like how much should it represent of an overall portfolio?
So most seasoned investors have a balanced portfolio. So they have a number of things with aggressive kind of gains and higher risk, and then they've got the lower risk and kind of lower gains. I would say Allbricks should be a part of a balanced portfolio. So, for me, if I was going to invest in property, I would invest through Allbricks because it gives me the flexibility, gives me the diversification, and allows me to help somebody realize the dream of home ownership. But I may also invest in the FTSE. I may always invest in some shares as well. My recommendation is, as a balance, as part of a balanced portfolio, property is actually probably one of the most stable investment vehicles that people have invested in over the last millennia, or whatever investment's been around. Property is usually one of the foundation ones because it's got the lowest risk, and on average, it's got pretty good returns. It outperforms the FTSE over X amount of years. And last year, as an example, FTSE is down 5.6% in the last year, whereas property is up 1.9%. And that's just capital growth. That doesn't include the yield you receive.
Okay, if you want to start property investing, how much money will you need or should consider to have available to invest to make it worth it?
So if you're doing your own buy-to-let, you would need the deposit for the mortgage, which is 25 to 45%. You would then need operational costs, which, I read an article that said today 52% of the yield you receive goes on your operational costs as an investor. So, and you've got to have the higher interest rate. Or with Allbricks, you only need £2,000 to invest. There's no leverage. So, you can't end up in negative equity as such, because actually there is no leverage. You get monthly returns on your £2,000, whatever that is, and you get the capital gains from it, and you can diversify it. So for me, if I was coming into property today, Allbricks is a very good alternative to buying, having your own buy-to-let. It's more profitable. It's less risk, less stress.
Great answer. Thank you. And do you think this is the correct time for the first-time buyers?
Absolutely. For me, and again, this comes down to what I said before, how much stability do you need in your life? But I buy a house to be here for 5, 7, 10 years. So it's never a wrong time to buy a house that you want to live in. I know that property has become this golden goose that people think, I need to be in this to make money. Yes, do that as an investor. Don't do that for your own home. As a first-time buyer, I think you want to get the stability you need in your life to be near your family. And actually, this type of market is an amazing place if you can get the finance. What stops people being able to get into this market is banks not lending you the money, right? Not being able to get a mortgage or finance it. With companies like Allbricks, we allow those home buyers to enter this market when it's going down and get the security that you need in your life. For me, I think this is a great time to get into for your own buy and to invest. The worst time would be when you got 20 home buyers for each one, and the house sells for 30% above valuation, and you've got the same problem with investors. This sort of market is perfect. There's lots of deals to be had, and you can pick and choose what you want to buy, and you can probably get much more for your money.
Yeah, and as you said at the beginning, you can also really dollar cost average your investment by entering, slowly and gradually as prices go down. So you reduce the kind of timing risk there, which is super interesting. Yeah. Now, you've talked about the yield. So what is the sort of average yield on Allbricks?
Yeah, so there is no average yield simply because you're getting direct returns. So as I mentioned before, you have the properties that show you what the yield for that property is. Now, somewhere in London, you're getting somewhere between 4 and 8% yield. Up north England, you're getting between 10 and 15% yield. Then you look at the growth. So if I'm going to get this much yield, you usually want to balance it between your yield and your growth. Now, more recent years, north of England was traditionally high yield, lower growth, whereas the south of England, like London, was higher growth, lower yield. But that's being kind of muddled now. North of England is expected to outgrow London in the next 10 years. So again, you as the investor will choose the homes you want to invest in, and you balance your portfolio about, I'm going to have 30% of my portfolio being in high growth and low yield, but I want to have 70% of it the other way around. They pick, not us. It's not an average return.
Thank you. No, that's super clear. Is there any charge on my investment or my whole portfolio or my whole capital invested? So yes, there's two charges. One is you pay 5% transaction fee when you buy your bricks or invest in bricks through Allbricks. So that's it. That's a one-off fee. You paid it. It's done. And when you receive the rent, we charge 7% of that rent, 5% for property management, 2% for platform management. Now we do set aside 12% of the rent, and this goes into a savings account for specifically repairing that property. So unlike your own buy-to-let, and actually doing some other ways of investment, when something breaks in that property, you don't have to pay for it. Most cases, there will be exceptions, but in most cases, you won't get a call that says the boiler's blown up, you need to pay £700. That's covered from that savings account. Now, this applies for the home buyer as well as the investors. So once you've invested with us, you have peace of mind that in almost all cases that you're not going to get called up about some exceptional costs. There will be some exceptions to that, something that's not covered by insurance and something we didn't pick up, some sort of freak of nature or something, but that is pretty much covered. But those are the fees, 5% one-off. Thank you. Thank you so much, Shahram. I'm afraid that's all the time we have for today, but thank you so much for joining us. All your answers were extremely clear and straight and to the point. So, I'm sure our Finimizers appreciated that. And I hope everyone has enjoyed it. Thank you everyone for joining us today. Remember to please fill out the feedback form that will pop up on your screens when this ends. And yeah, I hope you've all enjoyed today's event and that you're all considering investing in residential properties, real estate, and potentially through Allbricks. And hope to see you at the next one. Thanks again, Shahram. Thank you everyone for joining.
Thank you very much.
Bye-bye.